Hello, good morning and a warm welcome. James Preston with you for Kalkine TV, reporting to you live from Sydney, and you're watching the Global Markets Roundup show. Let's dive into some key highlights and happenings from yesterday, starting with the US market. Global shares fell for a third day in a row on Tuesday, with tech stocks plummeting. Central banks might decide to raise interest rates, which could indeed lead to bond yields rising on both sides of the Atlantic. MSCI's gauge of stocks across the globe shed 1.85%. Benchmark US indices closed in red on Tuesday after broad losses across stock segments, and investors weighed weak consumer confidence data for the S&P 500. That was down by 2.04% to 4,325.63. The Dow Jones fell 1.63% to 34,299.99. The Nasdaq Composite fell 2.83% to 14,546.68. The small cap Russell 2000 was down 2.25% to 2,229.78, and consumer confidence also fell further in September, following 2 consecutive months of decline in July and August. Last week, the Federal Reserve had signalled that it might start withdrawing its asset buying program in November, along with an interest rate revision by next year. Meanwhile, the 10-year Treasury bond yields rose to a 3-month high on Monday. Technology and consumer discretionary stocks were the biggest losers. Gold futures were down 1.06%, silver decreased by 1.03%, copper fell by 0.98%, Brent crude oil futures decreased by 1.65%, and WTI crude was down by 1.48%. 30-year Treasury bond yields were up by 4.99%, 10-year bond yields rose by 4.18%, the US dollar futures index also increased by 0.38%. European stocks sank to their lowest in a week on Tuesday as a surge in government bond yields knocked high-growth technology shares. The Pan-European Stocks 600 index was down by 2.2%. Eurozone bond yields rose to their highest in 3 months on Tuesday, and inflation expectations reached levels last seen in 2015. Japanese shares ended lower on Tuesday. The Nikkei share average dipped by 0.19%, the broader Topix edged down by 0.29%, and Chinese shares closed higher on Tuesday, led by gains in real estate stocks. The blue chip CSI 300 index edged up by 0.1%, the Shanghai Composite Index gained 0.5%, and South Korean shares also closed lower on Tuesday. That was in line with broader Asian markets upon lingering fears over the state of China's Evergrande Group. The Kospi also closed down by 35.72 points, or 1.14%. The ASX 200 fell by 1.5% in the previous session on Tuesday. Meridian Energy, VIP Gloves, Coventry Group and Perpetual Equity Group will go ex-dividend today. 2-year yields for the US were at 0.3%. Australia was experiencing 0.02% for their 5-year yield. US 1.02%, Australia 0.77%. 10-year yields for the US was 1.54%, Australia 1.48%, and Germany was down by 0.2%. The US dollar touched a 10.5-month high, supported by rising Treasury yields. The dollar index rose by 0.31%. And 3-month copper on the London Metal Exchange was down by 1.1%, trading at US $9,260. All right, time now for a very short break, but stay tuned as I'll be back in just a moment with all the updates from the Asian and Australian markets. Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news,
we cover it all on our news segments.
Be on top of the latest news
with Kalkine TV.
Welcome back to Kalkine TV. I'm James Preston and you're watching the Global Markets Roundup show exclusive to Kalkine. European stocks sank to their lowest in a week on Tuesday as a surge in government bond yields knocked high-growth technology shares, with fresh signs of a slowdown in China's economy weighing on investor sentiment. The Pan-European Stock 600 index was down by 2.2%, its biggest one-day decline in over 2 months, as a jump in US Treasury yields signal that investors were bracing for higher rates and the risk of persistent inflation. Eurozone bond yields rose to their highest in 3 months on Tuesday, and inflation expectations reached levels last seen in 2015 as markets fretted over leading central banks' monetary policy outlooks. The FTSE 100 continues to trade under pressure. After a soft start, it's down by 0.12% at 7,055, while the mid-cap focused FTSE 250 index is down by 1.73%. The blue chip index has, however, received some support from the oil and gas stocks, which were trading higher following the rise in global energy prices. Crude oil is trading near $80. Natural gas prices have seen an upsurge in the past few weeks due to lower global supply and forecast of higher heating demand during the cold winter season, which could lead to a further rise in prices. Japanese shares ended lower on Tuesday as heavy losses in chip makers and shippers eclipsed investor hopes for a steady economic growth momentum under a new political leadership in the run-up to a ruling party election. The Nikkei share average dipped by 0.19% to close after falling as much as 0.78% earlier in the session. Chinese shares closed higher on Tuesday, led by gains in real estate stocks, after the central bank pledged to protect consumers exposed to the housing market, even as the country grappled with power crunch and concerns over economic recovery. The blue chip CSI 300 index edged by 1.1% higher, while the Shanghai Composite Index gained 0.5%. South Korean shares closed lower on Tuesday, in line with broader Asian markets, upon lingering fears of the fate of China's Evergrande Group and worries about the potential impact of a widening power shortage in China. Moving on to the bond yields in US dollar, the 10-year US Treasury hit a level last seen in the middle of June as expectations over inflation began to surge. The bonds continue their sell-off for the fourth day on Tuesday. The Australian dollar gained ground on Tuesday, helped by higher resource prices and the blistering pace of vaccinations at home, while New Zealand's bond yield spiked ahead of a looming lift in local cash rates. The ASX 200 fell by 1.5% to 7,275.6 points in the previous session on Tuesday. Meanwhile, a few shares such as Meridian Energy, VIP Gloves, Coventry Group and Perpetual Equity Group will all go ex-dividend today. The Aussie dollar firmed by 0.2% after recovering from a dip to reach 73.616 cents to the US dollar. It has been edging up after the resilience forced spectators to cut back on crowded short positions. The US dollar touched a 10.5-month high, supported by rising Treasury yields, and the dollar index also rose by 0.31%. Meanwhile, 3-month copper on the London Metal Exchange was down by 1.1% at $9,260. All right, well, that's all for now. Keep watching Kalkine TV for more live market updates throughout the day, along with the latest business information. I'm James Preston, reporting for Kalkine.